Just got back from a short trip I had to take, trying to work out things for the benefit of you. There's some stuff out there that's not being looked at in the marketplace that I think could be monster for the real estate investor. And I think there's an opportunity lying there, and it's not really lying there. You got to climb a big, tall son of a bitch of a tree. It's not low hanging fruit whatsoever. But I think it's going to be a monster for the real estate investor to really succeed going forward if we're able to pull this off. So it's going to take a shit ton of work. My team's got to come together in some other directions. We got to work with some other external forces, and bam, we could have something over the next 6 to 12 months be pretty significant for you. So just little tiny touch that just know I'm never stopping, thinking, working, doing something. So that's why you didn't get recorded yesterday. So I'm back in the saddle today. And I'm going to show you some stuff because since people keep talking about the Fed dropping rates, it's such a big thing, right? And then we had this last week. You saw, well, let me just show you what we're looking at here. Let's just get into the chart and talk about this now. Let's just not even beleaguer this at all. So let's talk this for just a second. Actually, not even a second. We're going to dig into this chart a bit. So this is the point that we've been watching. I'm going to zoom in on this so you can see we've been watching. And there's the one day that we had the information that just flipped on us, right? We were not even ready for it last week. And when that came out, completely different than what and you saw in the last video, what was anticipated. It rocketed right up, but where did it go? It stopped right at the top of this block. And then we have other data that comes out and gives us a little bit more strength, but it's not strong enough. And what I find very, very interesting is we had the July ISM data come out, which is the Institute for Supply Management, and it came out negative. Negative compared to what they're anticipating, right? So it's showing more of a contraction. So when you look back in the history on this particular reading, that they had a prior reading of 50.8%. They had a consensus of it going to 51, over 51. There's two different things I saw, 51% or 51.5. We were down to 50.1. So we actually contracted from the previous reading. That right there is a pretty big deal, as you can see, because for what news came out, if you saw what was going on, if you're watching the news, the president is saying, hey, we're going to replace, the head of the BLM, the Bureau of Labor Statistics, BLS, sorry, here, the head of the Bureau of Labor Statistics, because they're giving bullshit data, basically, and it's swinging the markets. Look at the swing it gave to the market. But then the market's hearing that, and it's not getting the steam. And then you have the ISM coming in. The things are just not getting the steam to break above here. So we've got this line that's holding us. And then, of course, we have this big, ominous block up here, as we have seen in the past, just is not easy to break through. That is our barrier. This is the wall that stops everything. And it goes all the way back to it broke into it from 2022 in the quantitative easing world. Once we broke through with quantitative tightening, it became a force to be reckoned with. That is our barrier. So what I added to this chart today, and what I'm going to do, I'm going to delete a lot of stuff off here just so we can make it clear to see what we've got going. I want to take away a lot of the noise that's on this so we can just see couple different things. So I'm going to get rid of a ton of things. The ones I'm not going to get rid of is our big barrier here. And I'm not going to get rid of our baseline, what I believe is our bottom, or at least our peak for rates. This is, I believe, our bottom is where it peaks up, highest rate. This is going to be where our lowest rates are, and that's where I think we're going to swing. As you can tell, it tends to play in that space pretty well all the way back to 2022. But what I want to zoom in on is this here, and I'll get rid of these channels, so we get rid of that. These items right here, I've got these blue lines, and what do they represent? That is the main question, right? So these represents the dates that the Fed dropped rates recently. So first was the 50 basis point drop on September 18th of 2024. You see, I have it labeled September 18th. Dropped the rates because of things were happening in the market. This is when the Fed Open Market Committee had happened. There's enough happening here. I thought, okay, this is a time to drop the rates. What happened to mortgage-backed securities when they dropped the rates? Look at the downward movement. That means negative movement very, very inflationary, especially since it was a half a point. All that inflationary move brought us here. They had another Fed Open Market Committee meeting. They're like, yeah, we're still, I don't think that, since we're not down here, now I can't say all that they looked at, right? I was just saying this is our points in the charts as far as mortgage-backed securities. They dropped it again a quarter of a percent. So 25 basis points, look what it did, more negative. But it rebounded from it. And as it comes in its rebound, Fed drops again, and we saw some more negative movement. So if you look at this from when the Fed started doing all the dropping, it's really interesting to see what the market has done with the Fed doing all this dropping. Let me do this here. Let me see if I can get a channel to work here for us. So from the time the Fed started dropping the interest rates, this is really the downward movement from the Fed rate drop. Look at that. It's kind of interesting to see. Every time the Fed dropped the rates, if we even just put it on the peaks of those rate drops, that's where we land. So I find it very, very interesting. It's downward movement when the Fed's dropping the rates as far as the short term is concerned. So if we have that now, we've climbed back out of here. We're up in this area now, which is actually quite a high point. Higher than the last two drops. We're at the peak, I think, probably of data that was coming in before their Fed meeting. And then, of course, those few days later, we have the actual decision to drop. So I don't know if any of this peak had influence, but we're at that peak again. Is it possible the Fed might drop the rate again? If they do, what do we do? I think we're going to follow that channel again, or follow a channel downward. So that's something that we might see. So just so you know, when people are saying, man, I'm going to hold back and wait and see if the Fed drop the rates. If they do that, you better be locking. That's all I can say. If you are closing within a certain period of time, if you haven't even decided on anything at that point, if you're just waiting for that to even get in the game, it's a bad time to get in the game. I say get in the game now. Lock when the deal's there. The rates don't influence the deal. The deal influences everything. The rates are just a number in the deal. If you want to understand that, reach out to me. Text me. 602-291-3357. With that text, we'll get on a call. I'll talk to you about, explain to you what is the deal regardless of the rates. So appreciate you guys. We'll get more information to you as the week goes on, and there'll be more data coming out this week. There's some more information with respect to jobs as always, and we'll be able to deliver on how that affects the market. Talk to you soon.